Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday, the 2nd of February 2025. We're providing our regular weekly update for the week ending the 31st of January. Gold and silver continued to rise last week, with the potential of a very exciting week ahead. Why do we say that? Let's take a look. Now, I know we normally leave this to the end of the video, but we've noticed that most viewers or listeners listen to about 70% and then cut off. So we thought we'd ask you at the start of this video, if you don't mind, to at least please give us a thumbs up so that it helps the video to be spread further afield. Gold rose $27 last week, rising from $2,772 to $2,799. Having hit a high of 2820, so it broke through the 28 barrier, and a low of 2731, a rise of 1%. Gold spread between high and low was $89. Last week we predicted gold would trade between 2725 and 2825, which it did comfortably. In sterling terms, gold was up £44, closing at £2,267. And in euros, it closed up €60 at 2,708 euros. Silver rose 75 cents, moving from $30.72 to $31.47. Having been as high as $32.10, so it broke through the 32 barrier, and as low as $29.76, so it broke below the $30 barrier, a rise of 2.5%. The difference between its high and low was $2.34. Last week we said silver would trade between $30 and $32, with outliers ranging from $29 to $32.75, which it did comfortably. In sterling terms, silver rose 77 pence, closing at £25 and 34 pence. And in euros, it closed at 30.57 euros. That's up 1.29 euros. Gold to silver ratio fell from 90.3 to 1 to 88.9 to 1. Bitcoin is down $5,000 on the week, really having fallen in the last couple of days, and is currently standing at $99,500. But we all know a $5,000 spread on Bitcoin is neither here nor there. US equities were mixed, with a 0.5% on average fall on Friday. The Dow Jones closed up 120 points at 44,544. But the S&P 500 was down 61 at 6,040, and the Nasdaq Composite was down 327 at 19,627 points. Interesting to see how the AI sector is going to further impact, particularly the Nasdaq. The FTSE 100 index up 171 points at 8,673. Oils were lower. Good news there, but they may rise this week. Have to be careful. Brent crude closed down $2.83 at $75.67, and WTI crude closed down $2.13 at $72.53. The dollar index was up almost a full point, up 0.93 points on the week at 108.37. Now, last week we stated to watch out for the FOMC meeting on Wednesday and the PCE inflation data on Friday. Well, as predicted, the Fed paused its rate cuts and suggested that it was in no hurry to resume cuts in the very near future because of their concerns over inflation. And we all know this is further exacerbated with Trump's tariff threats. Equity markets fell on the announcement. And on Friday, the new inflation data, the PCE and core PCE, well, we said the year-over-year for PCE has been standing at 2.4% and was expected to rise to 2.6%, which it did. And the core rate stood at 2.8%, no change. Again, in line with expectations, but marginally disappointing for some. Clark Bellin, the Chief Investment Officer at Bellwether Wealth in Lincoln, NEB, said, quote, "With still stubborn inflation, a very strong economy and labour market, more time is needed to allow inflation to settle down before the Fed can cut rates again." Unquote. Now, this coming week, we have manufacturing PMIs for January. On Tuesday, factory orders for December. Wednesday, the ADP employment report for January and services PMIs also for January. And on Friday, we have the US employment report, or the non-farm payrolls, and markets are expecting 175,000 new jobs, with the unemployment rate holding steady at 4.1%. Watch out for that figure. Can be quite pivotal. Looking at gold, there is no doubt that the rise we saw towards the end of last week was a mixture of inflation fears and President Trump's announcement on imposing 25% tariffs on Canada and Mexico, with more to apply elsewhere in the world, quite possibly, unless they come to heel. We have produced a video on why tariffs are inflationary some months ago. We've provided a link below. And we can see markets are concerned enough to run to gold as a safe haven asset. Please note, central bank buying too has underpinned its value. With Canada over the weekend announcing it will counteract with revenge tariffs, and we are waiting to hear what Mexico will do, there's no doubt that gold will continue to benefit until this game of threat and counter-threat, or economic chicken, fully plays out. The fact that the Fed has signalled it has no interest in lowering rates at present highlights that it fears potentially higher inflation. A number of Fed governors and representatives are giving evidence this week, and it will be notable to hear what they have to say. As mentioned earlier, note next Friday's jobs report, because this will either underpin gold as an asset about to blow through 2,900 or could potentially cause it to drop back to 2007 or lower. Silver is being affected by the same economic conditions, and if gold rises, we can see silver surpass $32.30 quite easily and stretch to $33. The reason I say $32.30 is because around the $32.35 level, it's a notable technical position of resistance. So, if, however, gold falls back, we will be back into $30 territory. So, we can expect some exciting and interesting moves this coming week, both geopolitically and financial data affecting its price. So, where do we forecast gold and silver moving this coming week? Well, we're expecting gold to trade between $2,750 and $2,850, with $2,725 and $2,890 as outliers. Silver we expect to trade between $30.50 and $32.75, with $30 and $33.25 as outliers. What do you think? Please do share your thoughts. Meanwhile, thank you so much for listening. We'd appreciate it if you'd give this video a thumbs up, subscribe, press the bell sign. This week should be very exciting, and we hope for you a most profitable one too.